Hey guys.
Hello, gentlemen.
Hey. Dylan, you just told me about some zinger that I need to check out.
Yeah, well, we're gonna leave that alone. This is gonna be a lot like that episode that we had remember the episode when our great producer Rob told us not to say so much and so many filler words, and then we're all just sitting here quietly because we were afraid to say a filler word. I think that's what's going to happen today because we have an incredible guest, and that guest dictates that we act a little more professional today.
Gotta like up our game. Dylan, I just have a text saying coming to the show, which I was late this morning. I apologize, but it's really, really early, guys. It's super early.
Well,
it's nearly. I always say to you guys in the US when you say it's early and it's what 8 in the morning for you. It's like nearly lunchtime. You guys have lunch at 11, so it's like most of your day's gone.
Are we hobbits? I don't know.
Well, okay. I do have a first and second lunch, so I think he's spot on. Maybe I'm just a giant hobbit.
Sorry, I do have a cold as well. Guys. We got to get our shit together.
We were thinking you're looking slightly less handsome than usual, was probably our assessment, Doug.
Yeah. I did get a haircut yesterday, ready for InsurTech New York. And I tried to start a rap battle with Curtis Goldberg yesterday. And
wow.
And well, he's like, well,
yeah, how's that going?
He just said no. So it was just the chat. Gemini has you can make little songs about whatever you want now. So nice. I made one about Dylan. I made one about Peter. I made one about our event on Monday. I made one about InsurTech New York. Made one about my kids getting up in the morning. Basically anything to get out of doing any real work. So thank you AI for making me less productive.
The founder's dilemma: to use AI and make silly songs, or to make millions of dollars.
Yeah,
that's where we're at.
Which one should we do?
So just because we have Joe in backstage right now listening to this is the perfect time. This is a perfect time for us to talk about that new segment we're going to drop today, which is. Maybe live term sheets and just like commit them to giving each of us 10 to 20 million. I don't know, Doug, I think you probably need 30 or 40 million for rap battle videos.
Rap battle video.
What are we thinking? Yeah.
Joe's not smiling, so I don't think he likes this segment.
Okay. All right. We won't trap him. That's fine.
Yeah, he's putting a thumbs down. He's like, no.
So we just got rejected. That's okay.
Yeah, I thought you said we were going to be a little bit more serious on this episode.
Very serious. Button down. Button down. Excuse me. Let me get one more button.
Got it. Anything we need to discuss because Joe's the first guest I think that showed up not only on time but early. Normally we're doing some air filling here, but Joe's ready to go. He can't wait to get on the show. I feel like we shouldn't keep him waiting.
I don't think we should either. It's like keeping royalty waiting. Why would we do that?
I had a great segue, which I'm still going to use. When you said millions of dollars, I was going to say, Dylan, speaking of millions of dollars, here is a guy that has deployed millions of dollars into the insurance space.
Oh, I love it.
He is single-handedly holding up a lot. You know those memes of the market? And like it'll have like NVIDIA, like a Jenga tower, and like NVIDIA is like the little thing. That's Joe. Joe is holding it all up, and he's so forever.
He's our Atlas. He's our
Atlas.
Amazing.
Yeah. Before Joe comes on, because I don't want to embarrass him, I just want to make him listen and embarrass him. I met the one person yesterday that didn't know who Joe Zuck was. And it was an advisor of ours, and we did have to let her go, unfortunately. We said, thank you.
That was it.
Great working with you.
Fair enough.
I said, I'm doing I got to get up early in the morning tomorrow. We're doing a taping with Joe Zuck. And she's like, who's Joe Zuck? I was like,
The only person who doesn't know.
We've rectified that. Now she knows. So we've got 100% coverage.
That's great.
I'm sure she also probably asked, "What's the age of the MGA?" Right?
I think in her mind she's like, "Why am I talking to you?"
That's fair. That's fair.
Okay, guys, let's not keep this wonderful gentleman waiting anymore. Let's bring him on the show. Everyone, this is Joe Zuck. Joe, thanks for coming on, man.
Thank you, Doug.
Welcome, Joe.
Thank you, Dylan. Yeah, no, thank you. Thank you, Peter. Pleasure to be here.
You look comfortable. Maybe some like a Four Seasons room. You're outdoors, or is this an office?
No. I am in my 8x12 box here in Dallas, Texas. So interior office.
It must be your glow, Joe. That's just.
Oh, it must be my glow. Yeah, it must be my glow. I'm wide awake here at 7 a.m. in Central Time here in Dallas. So I was looking forward all week to the Age of the MGA podcast here. So
incredible.
I appreciate the opportunity to speak to you guys.
The first time anybody's ever said that, so it's really cool.
Joe, actually, our last guest, we were at the very end of the show. We were talking. We were saying, "Hey, our next guest is going to be you," and he immediately. I mean, he's like, "Oh my gosh, it's incredible that I'm getting this honor to be on the Age of the MGA show." You've been bringing credibility to our show now for 2.5 weeks that we've been talking about you coming here. So we're sorry that we're stealing your credibility and ruining it with this show.
No, that's kind, guys. That's kind. Certainly. I feel like you're the all-in of the podcast of the insurance industry. So early days. So
the very poorly executed.
the poor man's version of all-in.
Yeah.
Which makes sense.
What we lack in professionalism.
We're in the insurance industry.
Yeah. Exactly. Yeah.
None of us are billionaires. It's kind of weird.
Yeah.
Well, 3 of us at least. Well.
No, not even close. Not even close.
So, Dylan, how prepared are you for this? I want to see if you actually tried to up your game for Joe, or if you're just still winging it.
Yeah, just of course we're prepared as always. Peter sending out a early agenda a couple days before the show or a day before the show. That's the most prepared we've ever been for a guest. So
super helpful. I appreciate it, Peter. Thank you.
Yeah, whether we stick to it, Joe, is another thing.
That's the problem. So actually, while we're talking about podcasts, did I just see that Accelerant is dropping an MGA podcast? And
they are.
We're bringing our competitor onto the show. Is that what's happening? I mean, I know you're not the host, but
I'm not the host. I think TJ's doing it, right? It's my understanding. So
maybe not anymore. Maybe Joe's going to go shut that down.
No. It's good. I think, stories, being able to articulate and tell your story, I think is really important in insurance. And I think podcast is a good medium for it. So
TJ's an awesome guy, by the way. I just had the pleasure of meeting him a few months ago, but have hung out a lot with him. And super interesting. I mean, we'll have him on. You'll get a story, but like former MGA operator and now within the Accelerant family. So I'm excited to talk about what he's done and like what you guys are all building at Accelerant right now to help other MGAs. So,
definitely.
Cool. Dylan, what should we get into first? Like, do you want to start with claims? Do you want to talk about investments?
There's just so much. But let's start with investments because
actually, why don't we start with Joe? Joe?
Your background. I mean, we were pretending like
sure. I guess for folks that don't know me, and I'm curious if the one person you talked to you didn't know me, but we could talk about that offline. So my name's Joe Zuck. I'm an operating partner with Altamont. Been working with the firm for the last 6 years. I grew up. I like to say I grew up in the reinsurance side of the equation, which I did as a broker and underwriter for about a decade. And then I got an MBA in primary insurance for 8 years as running corporate development strategy for Atlas General, and then building out our property and commercial divisions from scratch. And then left to go run corporate development strategy for Orchid Underwriters, brought in a minority private equity investor in Dowling at Atlas, which was a great experience, got me exposed to the world of PE and investment banking and insurance, and we were highly entrepreneurial there at Atlas, and then was involved in InsurTech, I guess 1.0 back in 2015. I was talking about that with somebody yesterday. But I've been super fortunate, guys, right, to been underwriter, broker, MGA operator, now on the investing side of the equation with 1 foot alongside our portfolio companies and their management teams, and then 1 foot alongside our investing principals here at Altamont. I've also been on the, while we've had a great number of wins, I've also been on the losing end of all those experiences as well, and I think that's been really formulative in my career, but also given me a broad and super fortunate broad depth of understanding of how the industry operates and where I think the opportunities set is going forward as well. So and as you all know, try to be useful and helpful to everybody in the industry. So thank you again for the opportunity to be on the pod.
Pleasure. Joe, so one question we get asked a lot in this industry, right, is about attracting young talent to the industry and making insurance interesting for people. It's quite a varied career trajectory that you just told us about there and you went through. Looking back on it, I'm really interested for people listening, especially young, entrepreneurial, ambitious people in our space. Were there kind of deliberate moves for you? Did you always see in your mind you wanted to get to the position you are now, or is it like a lot of things that kind of happens by circumstance and then things go?
Super astute question, right? I would say 2 things. One, I was always curious, even on the reinsurance side, and I think reinsurance is a great place to build that foundational level of understanding, because it is kind of the ultimate risk capital, especially on the treaty side or even on the facultative side. I mean, no better way to really understand how to underwrite, price, and rate than facultative. And then on the treaty side, you get a broad spectrum as well. So that was great from that perspective. And then on the MGA side, really starting to understand how hard it is to issue a policy, right? How hard it is to go sell. People think and forget about, we actually have to sell a product in insurance. But I was always curious, Peter, along the way about other elements of the industry and getting exposed to that. I think I was just fortunate to get exposed to the MGA and the program industry on the reinsurance side. And that, through relationships and networking, got me a great role at Atlas, right, where I came in at the board level, was granted some equity, and then also a ton of runway to be an entrepreneur. But I had to execute, right, and I did. But I learned on the fly, right, how to hire people, right, manage people, etc. And then, what got me interested in PE again was that same curiosity of seeing kind of that interest and just knowing where the ball was going, and then putting myself out there to go call on PE firms, go call on investment bankers, and bring value to them. So it was a bit of curiosity, bit of not just saying, hey, all I do is reinsurance, for Midwest mutuals, right, or whatever, and I have no understanding of what else is going on in the insurance industry, but also putting myself out there and trying to create value for people with no, expectation in return, granted me a lot of opportunities. And I put myself out there, right? And many times was rejected, especially as a reinsurance broker. You get used to that pretty quickly, or as an insurance producer. So it's not always for the faint of heart. But I would say to young folks kind of listening in the crowd, I mean, there's no better industry that to learn about so many different things of the world, whether it's geopolitics, whether it's commodities, whether it's underlying businesses. I mean, every day, right? In insurance, it's infinitely fascinating, and I've learned something new. But yeah, I would say for any young person listening, if you want an industry that pays people well, is very relationships driven, and is always a puzzle every day, I can't think of a better industry than the insurance industry.
I love it. Yeah, Joe, this is an area I'm actually very passionate about, and getting young people into our industry. So with AI, really changing the way we're doing business, especially in the next 3 or 4 years, I think we're we're just at the dawn of it now. What roles would you tell a recent college grad to go into? What areas of insurance should a young person consider?
It's a really good question. Well, I mean, I think it depends, right? If, I think of reinsurance a little bit more as the high finance investment banking side of it, right? So if that appeals to you, I think that's a really interesting area. Obviously, we're certainly passionate about the specialty insurance space and the MGA space. I think that's a great entrepreneurial, playground. But, Dylan, you raised claims as well. And I there's great opportunities in the claim sector, right? Which is an area that often, is not always looked on favorably because it's a little bit more of the uglier side of the business, right? You're paying out claims with angry claimants, right, or so forth. But I think there's so much value to be created on the claim side because it validates, right, what's going on the MGA side. And there's so many great insurance professionals that started their career on the claim side of the equation and became leaders in our industry. And so, I think those would be kind of three segments I would think about to start.
Great. Yeah, I've been not to leave the claims discussion because I am going to continue there, but I've also been sending a lot of people to the specialty underwriting area, right?
Mm-hmm.
Getting in with E&S carriers and fresh out of college, you study environmental, great. There's environmental lines of business that can where you can still touch your specialty and what you've learned and apply it, but into an insurance setting. Same thing with, a very close friend of mine is on the engineering side. I pushed him over to work as an underwriter after a few years of being an engineer. It worked perfectly. I mean, now he's well into his management career. So there's a lot of great opportunities in insurance. I'd love to see young people, hopefully listening to this podcast, seeing us be, silly and fun, but and understand that there's a lot of really great business out there, opportunities for them to make great money, to provide for their families, and do something that's really interesting and quite hard. So, but back to the insurance side, just obviously the claim side, just because you brought it up. I was really curious about your take on what capacity providers and investors, because your involvement with Accelerant really also certainly lots of the capacity side as well. So, and that might be two different answers, but capacity providers and investors, what do they want to see from an MGA from the claims handling side? What level of thinking through the claim side should they be considering and bringing to the table when we're having those discussions with you about the investment or capacity?
Yeah, well, I mean, I think claims. I always say claims is the battlefield, right? It's where the MGA's underwriting thesis gets either validated or exposed. Everything else, the pitch deck, right, projections, capacity relationships, it's all theoretical until like the claims hit and how that is handled, right? And I can't tell you the number of MGUs I've come across that just did not have a handle on their claims or were saying, oh well, we just wait for the carrier to send us the loss ratios and not take an active interest in it. That to me is a big red flag, right? Everything is won lost on the claims battlefield. You can have the best rate, the best form, the best risk selection, the most kick-ass distribution element or angle. But if you're not paying attention to what's happening on the back end and fighting, every claim in terms of understanding why you're paying and getting that underwriting feedback loop going, I think that you're in real trouble. I've come across some of the best specialty E&S underwriters and the ones that are the most passionate. And these are guys 30, 40, almost 50 years in one case in the business. They remember all their worst claims, like passionately to the detail. It was out in California a couple of weeks ago with a colleague at Accelerant and an MGA I've known for a super long time. And, he was just we got onto this over, wine and late and dinner and so forth. And he could vividly recall claims from the late 70s and 80s where, and what were the underwriting lessons learned from them? I think those are the MGAs that stand the test of time. And, he has a huge remit in terms of what he can underwrite, right? Because we trust him with the risk capital. And I think that to me is one of the most important things.
I greatly appreciate that. That's Doug and Peter know that I'm now going to be floating for the rest of the day on cloud nine. So thank you. But
I've got a very big head.
I actually had just gotten a text message in the last, let's call it 2 weeks ago ish, of a senior underwriter who had texted me and said, my claims people are being a bunch of babies. I wish they would grow a spine. And that's the kind of person that I would want on my MGA, right? Because they're fighting for the terms that they had placed very intentionally into their policy. I want underwriters to be considering claims at every level. I want them to. Oh, Doug disappeared. I want them to understand that the claims process is important, and saying, listen, this is especially on the E&S side. We've put these exclusions and sublimits in place for a reason. Everyone agreed that this is what our coverage is. This is what our intent is. We need to enforce that intent and not be afraid to litigate in those cases, which is, that's a tough subject. And with social inflation and, nuclear verdicts, it's a scary world out there for everyone, for the underwriters and claims people. But the ability to show that intent of your policy and fight for that, that's a great characteristic in an underwriter.
Yeah, well, you touched on two things I think are really important there, right? Social legal inflation, fortunately or unfortunately, right? We're seeing the socioeconomic stratification continue, certainly in the US, but I think more globally, right? So I think that's only going to amplify. So on one side, you have that, right? And the importance of being able to understand, what your product is doing out there and what the plaintiff's bar is doing and litigation financing is doing. On the other side, I think that's also, and I think your audience, maybe is probably a little bit more tech forward here, what we're doing with AI, right? And, how can AI be used in claims, right? For coverage, right? For validation, let's be honest, insurance policies are pretty complex contracts, right? That take a very long time. And even the best professionals miss, key clauses and either pay a claim that they shouldn't, right? Or, maybe we do have exposure that wasn't contemplated, right? AI liability is one that's huge, right? It's silent on so much. I'm just waiting for that day when, we get some big headline claims coming out of that. But I think, it's going to be really interesting to see over the next couple of years how we're using AI. That's just not to augment adjusters, right? But it's really to see what happens post-loss. How are we then getting that underwriting feedback route? And it's not just, I want to make it clear to you and your audience, right? It's not to prevent, right? We're not in the business to not pay legitimate claims, but I think actually how do we widen the aperture and improve the coverage gap, right? And I think that's where it gets really exciting, right? Is how do we start to price for more risk in what is increasingly a riskier world, right?
Yeah, and Joe, you brought up an important point, right? Good faith claims handling is at the core of everything that we should be doing. It's making good on our promise, and what AI can do. It's not just the cases in which a payment is made and it's not intended to be made is one of the problems for inflating the cost of insurance. But then the other side is AI is going to be making this and just better claims handling in general. However you're doing that, however the conversation will be AI for the foreseeable future. We need to be actually resolving claims more quickly. The whole point is the other reason that everything is so expensive is because we're taking forever to handle our claims as an industry. Going through litigation, going through delay of claims because they're overwhelmed. Your claims adjusters are overwhelmed, have too many claims on their desk. That's leading to certainly the inflation of our premiums as well. And what I want to see is that we're paying claims that are owed immediately, much more quickly. And I think AI is going to unlock that. And so it's going to really bifurcate the claims process. One is going to be fast tracking claims that doesn't even need to be necessarily a very simple claim, but we're saying all these claims over here can be adjusted and resolved, and a payment can be made so very quickly. It never gets into litigation because it doesn't need to. No one wants to go to litigation, other than attorneys. And forgot about them. And I'm not crapping on them because I love a lot of the attorneys I work with. They're fantastic, and they've fought the good fight when necessary. But resolving a huge portion of the claims very, very quickly is the goal. And regardless of what that means, so that's sometimes denying liability, sometimes it's denying coverage, and many times it's paying claims. And then everything else goes into the long-term fight tooth and nail for, because if we genuinely don't owe it, right, because of either coverage or liability, we should actually fight that fight, and we should litigate those claims, and we should not be settling on the courthouse steps, because that only encourages more bad actions from a plaintiff's bar side.
Yeah, that makes sense.
Only because my computer got tired of listening to the claims conversation.
Yeah, it always happens. Always happens.
It's so weird, Doug.
I know, it is very strange. I do. So Joe, I want to talk a little bit about. We brought up earlier people coming into the space and being able to follow their passions, which is very true. What I like about a lot of the investments that I've seen you all make is you kind of find those operators that, and it's usually a team, right? There's an experienced insurance operator, but then there is somebody who like knows whatever niche space they're going into very, very well, and probably was an operator in that space for a period of time. So one has like intimate knowledge of the space, but two has kind of built-in distribution, at least at the start. So the teams I've seen you all invest in have been very interesting from that angle. So maybe we could talk a little bit about how you find those teams, how you source them, how you think about the investments that you're going to make, the teams that you like to invest in.
Yeah, no, maybe Joe, before you do that, just for the context for the audience, I think it'd be great if you could maybe talk us through at a high level, a few of your portfolio companies, just so people are aware of the context.
Yeah, no, definitely. So, here at Altamont, Altamont's a 16-year-old firm, about $4.5 billion under management, 4 verticals, but relevant for this is financial services, which is 80% insurance. So we have 9 portfolio companies in insurance, 4 on the balance sheet side and 5 on the insurance services side. Couvert, a life and annuity platform, Accelerant, the commercial P&C insurance risk exchange, Hadron, the hybrid fronting carrier, and Fleming on the casualty runoff side. Insurance services, 3 MGA platforms, Embark General, our personal lines MGA, Ascendix, which is our mid-market AI-driven specialty practice commercial insurance platform, Mission, which is aligned with Accelerant, our MGA incubator, Augment Risk, our reinsurance brokerage, and then we have an undisclosed portfolio company in the claims TPA space as well, which we haven't publicly disclosed yet. So we have kind of this ecosystem that we've developed here in covering most of the vertical. And to answer the question you raised, Doug, I think what a lot of times PE forgets that insurance is a duration business, right? And you have to be patient. And I think the beauty that we have here at Altamont is our fund lives are 17 years in duration. So we're long-term oriented investors, and our focus on insurance is pretty deliberate because A, it's complex, right? B, there's, I think, definable regulatory moats, right? And C, it is a bit different than the rest of financial services. We try to focus on sectors that, create real moats over time, and understanding that regulatory environment, understanding the nuances of the personnel, right? Of relationships do matter in insurance. And then I think understanding how distribution dynamics and capital structures come together here, that's where insurance gets like misvalued or misunderstood. So that's why you've seen so many PE run into retail, right? Because it is kind of the simpler side of the business, right? Reoccurring revenue, right? A little bit like RIAs and so forth. But where we've kind of focused on is a bit more, and we're unique in the sense of being a mid-market PE firm that's invested in kind of de novo platforms, Accelerant, Hadron, Augment, Couvert, right? Just to name a few. My role here is adding, operational context alongside the financial, engineering, right? And the piece of it. And where we look at teams is, where we can find folks that have, deep conviction in a segment. Doesn't mean it's, a segment that's completely novel or so forth, but, take Accelerant where, Jeff and Chris and Frank, the founders of Accelerant, all had a view that, hey, the MGA program business is dysfunctional. We can create a better model here in a mousetrap. Think about it both on the data side, but also on the risk capital side with the risk exchange. Program business wasn't new, but the way they were tackling it was certainly new. And I think there is something where, we had conviction in the management team, but also in conviction in the execution. And I always say for, many years, the team and ourselves alongside them, we just operationally out executed, right? And we executed like we had the best timing, right, with the hard market and the advent in the hard market. And I'm not going to say we didn't have great tailwinds, but we also had patience, right, in terms of investing a lot of hard equity into the risk capital to stand up the balance sheets before we kind of evolved into this risk exchange model with Accelerant. So I think that's how we look at the world and the business. But we had to have deep understanding of the MGA program market, or for example, in reinsurance, when, we backed Andrew Matson and the team to start Augment Risk, right? Maybe we were a little bit early there, but seeing the consolidation of the reinsurance brokerage industry there and saying that, hey, there's going to be kind of this depopulation and folks that get frustrated and spin out. That team is firing on all cylinders, but we're also focusing on kind of an underserved specialty niche, which is more kind of capital solutions there. So that hopefully that answers your question. It's probably a long-winded way of answering it.
Yeah, it does. And I mean, I think about your operating teams, and they're all amazing. Or just thinking about Accelerant. I remember the first time I heard about Accelerant, and then the second time, it seems like the company had just like basically gone public, and they hadn't yet, but it happened so quickly. The success that they had, to your point, just like they executed on all cylinders, and it was so fast what they were able to put together.
And we've been super fortunate to attract talent and capital, right? I mean, so people will say, well, what's your day-to-day kind of job, right, and role look like? I mean, it's chef, cook, chief bottle washer, anywhere to go out and create, value and be that kind of tip of the spear, right? And go play offense all day. But so much is like meeting really sharp, talented people and then thinking about like, hey, is there a role that I can hire myself out of a role that I'm kind of taking out on an interim basis at a portfolio company, or that we have a need, and bringing that value really quickly to our management team. And it just allows us to move so much faster. And again, the best thing for our portfolio companies has been this like kind of organic growth, right, of bringing really the best in class talent, and just creating value. And I think we've been very fortunate there.
So I do shit on PE firms a lot on this show. They're usually the software investor PE firms, like the ones that, they get a bad rap for a reason. And so in the future, just to be clear, every time you hear me shitting on PE firms, just know that I'm like excluding Altamont.
You're excluding us. I'm good. I feel better, Doug. Thank you.
That kept him up at night for sure.
And anyone that invests in tourists in the future, he's also
any other PE firm that is thinking about throwing some money our way, like you're also favored. But so the reason I bring that up is because I don't mean, I know you are, you're a PE operator and you work for PE firm.
Mm-hmm.
I don't think of you all that way. And I'll use you as a story about it because you know everyone, you give everyone time. You're always out there. I mean, you know people on these teams like long after, I think a typical person, a typical investor would. And knowing the important people within those teams, helping kind of get out and network and be like, hey, you should go work here. Like you should come work with us. Right. And so I think that's just a value add that I haven't seen not only in the PE space, but just with VCs as well. I think to a certain point,
that's true.
Even if the company's successful, they kind of put it, they're like, great, they can handle their own battles now. And I just don't see that with you specifically, but with Altamont as well.
Yeah, no, I mean, and I think we have a more founders first mentality, right? And really try to create value in a way that, moves the ball faster down the road. But is constructive. We're never going to go tell our portfolio companies, right? I'm not going to go tell Jeff Radke, right, how to run Accelerant, right, or so forth. But if he says, look, hey, could you guys be helpful in thinking through this? Or, was on the phone with our CEO of Augment Risk, Andrew Mattson, before this. And we were talking about, a certain, growth aperture to augment there. And one big thing was resourcing some great talent and how we think about structuring that business and being a sounding board. What I hear from a lot of founders and people looking for money is they're like, well, yeah, they really didn't understand my business. And they didn't understand the runway it took, right, to building a habitational MGA, for an example, or, they didn't understand what a soft market meant in insurance. Right. And I think we at Altamont certainly have that understanding of the deeper insurance market, but we're also, whether we're currently in an investment or as a prior investment, we still stay really close. Gary at McLaren's, right? We still stay close and, work with them across some of our portfolio companies still. And that was a great investment for us. It's been a great investment for future PE. So we try to always, build the portfolio companies alongside management to be better for the next investor or whatever their liquidity outcome, is. But also if we can't find, a role for somebody or be helpful, we're always helpful to try to refer a network. So, I keep an open Calendly, like I probably should say that because I'll get a plethora of inbound, but generally try to be helpful and try to refer people as well, because, hopefully it comes back or people remember you. And I think, the best compliment to me is, Joe, you helped me get that job, or that referral or connection, made a real difference in my business or something. And, it makes me feel good, right? More than any kind of monetary gain or benefit, right? Because this business to me is still so relationship driven, right? And that's what I'd like to be remembered for is, at least I was constructive, even if I couldn't have helped you, or if it didn't work out, why, and kind of, give a good, fair explanation versus ghosting, which, unfortunately is still endemic in our industry.
Well, Joe, the good news is only my mom listens to this show. So
that's good. So
if she's getting on your Calendly, it's just to share some cookie recipe.
I'll take a cookie recipe. I always like a good chocolate chip cookie, Doug. So
by the way, that was the one person that didn't know who you were before this. It was,
got it. It was Doug's mom.
My advisor. Yeah.
She was
like, Mom, am I doing a good job today? Yes, you are.
Yes, sweetie. You're always doing a great job.
The thing that stood out for me, Joe, when I was doing the guys laugh, because we did send through an agenda for this show and did even do a little bit of research. So professionalism is finally stepping up a little bit. But for me, the point you made about some of these portfolio companies and the timing is a really interesting one. I'm a big believer that you make your own luck, but the timing has been quite incredible, right? The E&S growth, like the MGA boom that we've seen, that we talk about a lot and motivated us to start this show, and so many other factors, the very small window of hard market that we had, et cetera, et cetera.
Correct.
What I'm interested in is years ahead, because I think we're coming to a point where some interesting things are happening, right? We're embracing a soft market. We're coming into a soft market. We've got what I perceive as many carriers. We spoke briefly about the announcement that Chubb made, but many carriers looking down market. How can I get into SME? How can I be more efficient in my own processing? I'm very interested to see what knock-on effect this has for MGAs in the next 1, 2, 3 years.
No, I think, Peter, I think it's a great question and really apropos, right? Was fortunate, when my colleagues at Altamont and so forth, that, I had so many ideas and people, and we did go kind of all in on terms of building out this ecosystem pretty aggressively and investing a lot of capital quickly because we saw the opportunity in the hard market and so forth. I think, we're in a period of what I'll call kind of like selective abundance, right? Capacity is now available, right? The market is softening quite, and it's not, and it's indiscriminate, right? I think the quality filter, is definitely going down, but it's, I think there are carriers who, I'm hearing kind of, hey, I want to get into the MGA program space, but they don't have the data infrastructure, right? They have this institutional inertia. And, Chubb came out and made those comments, right? And a few others. That is a little bit, certainly fearful. That being said, there are opportunities, right? For those that are thinking progressively in terms of how to use data and AI, right? And how to navigate it, but it's going to require discipline, right? It's going to require better execution, concerns about, how are you communicating and managing, your distribution. And, I think the best run MGAs are going to be in a great position and be still around. Poorly run MGAs and the fly by night carriers that are just saying, hey, I'm going to start to dip my toe in because I need top line growth. It's going to be a trail of tears here in a couple of years. We've seen this time and time again. I think to your broader point, though, is like, okay, I'm thinking now about where the ball is going, right? So thinking about reinsurance MGAs, right? Classic soft market play. But I think as you think about the broader world with the emergence of AI and, liability, with the Strait of Hormuz issues and oil and gas and like the innovation that's going to come out of this from solar and wind and alternative energy. Wow, that's a great place to go build right now, right? And think about where you're going to, deploy capital and so forth. So, for every market cycle, there are opportunities and there are growth areas to look at. But if I go back looking at my career, going back to 2003, right, I think there was the 04, 05 back-to-back cat years in the hard market there. Like, should have gone all in on building a Florida NewCo then. I was too young in the business, but certainly, and I think about kind of 2010, 2011, there was some opportunities for that little brief, maybe 6-month hard market then. And then it was doldrums. And then we had back-to-back cat years, 17, 18, a very long, probably arguably 10-year stretch of a soft market. And then, we had this golden period from 2019 through maybe last year. And now it's kind of, I think there's opportunities in this soft market to explore and unlock and uncover. But it's not going to be the same old playbook of, hey, it's not going to be easy where the prices are just going up and like, we can underwrite anything and be masked by rate increase in type form. We're going to have to box a little bit smarter as an industry.
But I have to imagine part of your value or some of the operating company's value. And I think of like the Accelerant Exchange, for instance, like doing some of that heavy lifting. And instead of a carrier trying to like go out and do that on their own, like we have a vehicle for you to start participating in this. That really gives you
100%.
Yeah. So
yeah. Go ahead.
And Doug, one of the things I was just thinking was that the opportunity might be less into a specific line of business and a location. You're talking about Florida. You're talking about a Florida NewCo with, because of an opportunity. Well, I think the opportunity right now is how does Chubb, who just made that announcement, how are they going to incorporate in their massive organization the AI that a NewCo can build right now? Will they be able to actually be efficient with their capital? Are they going to throw people at a problem because they can't throw the technology at it? Because moving a ship that large is extremely hard to do. I understand that there's there's been talks of layoffs with them and a variety of other companies. I'm not going to get into the drama of it, but the idea that a massive company like that can turn on the technology lever like a younger MGA, especially one built in the last year and in the next couple of years, is laughable. They're not able to do that.
Is that what your I didn't look at your text message yet, but that was it was a Chubb announcement you're talking about?
No. Well,
okay.
Whole different thing.
Let's not. I'm a Chubb policyholder, so please don't get me terminated. And two, like I'm trying to get them on as customers. So let's say nice things about Chubb. Come on.
I'm not saying mean things. I'm simply saying that large corporations like themselves, right? It goes for Travelers. It goes for.
I think your broader point, right, is that institutional inertia is like starts to get with a fear of budget, right? And carriers that aren't brave are going to be forced to confront what happens. When to your point, Dylan, when a smarter, faster, more nimbler MGA or MGU, right? Shout out to like Laurel here is powered by Laurel, right? Or and so forth is being able to kind of, take account like some of their best accounts, right? And build a quality book of business where, when you are so big, like some of these larger carriers, it just is like moving an aircraft carrier, right? It's, it's just hard, right? And you see the playbook over and over, right? It's not necessarily they're badly run. I mean, God, those are some great runs company. They're just not built to kind of move on a dime, right? And so unless they're doing some experimental things and bringing in AI, but it's again, the timeline takes time, right? It just takes time. Joe,
we can cut this if you don't want to talk about it. I'd love to maybe use like Hadron as an example, like how you like, because bringing Sam in, right? I think the idea was there, if I understood it correctly, and it's kind of like finding the right team to put together. So maybe using them as like kind of a canvas, using the Hadron example. By the way, we're trying to get Sam on to do our live show at Scout InsurTech. So maybe he can tell us this version of the story as well. But like putting the pieces together for an investment where you have a thesis, you're on the market looking for something like this.
Yeah.
How do you think about, the team, the infrastructure, or is it just like, no, it's bespoke and it just kind of comes together as it comes together, if it comes together?
Yeah. Well, I mean, the origin story of Hadron is a little bit of Field of Dreams, right? As we were thinking about kind of the evolution of Accelerant, right? And in the risk exchange there, we got on a couple carriers on the risk exchange, but it was a little bit like, hey, pardon the pun, how do you accelerate that? And it was like, if you build it, they will come. And we said, look, we understand the business really well. We have this investment thesis that, hey, we still think the hybrid fronting model isn't working as well as it should be. But we can really de-risk Hadron's investment through the risk exchange because we're going so much faster with Accelerant right now. We can lift and shift a portfolio, of business that makes sense, right? To a degree, and then give Sam and Pete and the team at Hadron optionality here to kind of focus on, well, how do you create value in, because, okay, the hardest thing is the cold start problem, as all you guys know, right, on this call, right, of going from 0 to 1, we're taking care of that, right? Suddenly you have this instant portfolio, right? You stand up the infrastructure, get going, and then now you can go create value of being really thoughtful there in terms of what they're doing. And I'll let either Sam speak about it or want to be, but we've got some unique approaches, I think, now at Hadron, and the team, I argue the team has built an exceptional specialty insurance carrier that just happens to be in the hybrid fronting business. And we're seeing where these platform MGAs are going and this kind of barbell that's shaping up between larger MGAs and some smaller MGAs, and how do we accommodate both? And then what is our kind of other growth apertures that we have at Hadron? That's how, that business has evolved and that thesis has evolved as the markets evolved, Doug. And then in terms of building the team and people, right, it was finding great, smart folks like Sam and Pete and Nick and Rob, partly through networking, and I had known Sam previously, and he had, the right stuff, and Colin Johnson in the UK and EU, who's very well experienced in this business and pulling a great culture together that, team is building something special there. So hopefully that answers your question.
Yeah. I thought it would, just because I knew some of the background, I always curious about how you put an organization like that together. And maybe like a follow-up to that would be, what's interesting to you now, like to the extent that you could talk about it?
Yeah.
Not specifically investments, but like what areas are you guys thinking about trying to tackle next?
Yeah. Great question. Well, I would say our hands are full with 9, right? And so far, so a lot of focus on the portfolio, but where do I think about the opportunity set going forward, right? I think it's in a couple different areas. I'm still really interested about, I've written about this a little bit, but how risk capital gets closer to risk origination, right? And where we maybe play there in creative ways. Is it partnering, right, with the insurance network aggregators and doing some unique things around there? I think, the diversification on the risk capital side, and, is there an MGA play there as a reinsurance MGA in a thoughtful way? And then, thinking about how we bring all of this unique AI and technology into better services for our portfolio companies and greater efficiency. I've always thought about, like, could we ever do a highly efficient, unique shared services model, right? That is now AI and tech enabled, where, a lot of the rote tasks, like accounts payable, is now just like done automatically. But then how do we kind of allow folks to think about more creative solutions and use cases and other things where the humans are doing more exception reporting and building new and, innovative service elements, right? Because, we probably have 9 accounts payable departments, right? And it's like, could you kind of consolidate that in a way that's, uses one AI powered platform and tech platform? So those are some of the areas, Doug, that we're thinking about without getting into kind of too much proprietary, thinking here. But, and then there's always, unique specialty, and we watch where the macro is going. Right. And so, I mentioned earlier, but I think kind of might be an interesting time to start an alternative energy MGA again, right? If investment flows into that, right, and so forth. So,
Cool stuff. Well, if anybody's listening and you are working on one of those things, I think you know who to go chat with.
I appreciate the shout out. Thank you. Yeah, be very kind. If I can be helpful to you or anybody, I certainly can make a couple of referrals. But yeah, always love to brainstorm with great thoughtful founders like yourselves and others.
So what are the other things I like about definitely Altamont, but all the portfolio companies, is just kind of the mafia that you all are creating? And so I think about like Kate moving over to GC now. So Altamont is kind of creating this nice web of, larger PE or VC firms are taking on, and maybe this is not a great thing for you all. It's like the talent's kind of spreading, but I think that network that's being created is probably beneficial to you all as well. But I just think like you're training these teams, whether it's, at Altamont or, like I said, in the operating company, and they're spreading out. I think saying I work for Altamont, I work for Accelerant, I work for Mission is kind of like 20 years ago saying I work for Google or whatever.
Yeah.
At least in the insurance space.
I love that comment, right? And that's how I thought about like early days recruiting at Accelerant as well, right? And I believe this is that, I think about the great companies in our industry and where folks came out of those great companies and, could kind of get a job anywhere in the insurance industry. I'm hoping that we're building those companies here at Altamont, right? Whether it's Accelerant or Hadron or Augment or wherever, where, folks, build up their careers, are part of something special, right? And then have the optionality to go do whatever they want in the industry and carry that legacy on. That's really, a mindset I take, right, in terms of what we're doing here. It's great that we can, build that network and even benefit the broader industry and give people that opportunity and chance to develop their careers.
It's such an entrepreneurial mindset, like you said, though, because
it is.
And again, I don't want to I'll use Chubb as an example. They can take care of their own. They're doing very well.
Of course.
If you're in the in the middle, like a 10-year career at Chubb, how are you getting new ideas across? You're probably going through like 4 or 5 different layers. You're not likely incubating anything internally, at least not easily. Whereas I do, like to your point, like somebody might just leave Accelerant and start their own thing and be right back in the Accelerant family, right? I think that maybe it's just like a difference in people that work at these 2 different types of organizations. But that's the thing that I love seeing is the, like I said, the ecosystem that you all are kind of building.
Well, yeah, and you hit the right point. I mean, we're super entrepreneurial, and I always say for our incubation platforms, whether it's Ascendix or Mission, right? The only thing you're really losing is time. Like you get to be an entrepreneurial with somebody else's checkbook, right? With aligned capacity and so forth. And the traditional career path, right, Doug, is great if, for an underwriter, you get a good class of business, you work the ranks on management, you get a great, but you're spending probably 80% of your time in meetings. And I remember early days, right, when we were launching Mission, right, I'd get calls and speak to underwriters. And it's like, oh, Joe, I'm just spending literally all my time talking about the next policy admin system. And I want to go build product and program, for distribution and work with distribution. And I think unfortunately, these larger companies destroy their best assets, right? In terms of really motivated individuals, or it kills that entrepreneurial spirit where, we're trying to build platforms and portfolio companies that really enable that. And I think, I love the MJ incubation model is that it's one of the greatest, entrepreneurial platforms you can do, right? And not only can you create wealth, but you can, be super creative and so forth. And that compounds over time. I think, why, I think where we're going to more modularization, as I like to call it in insurance, which has happened in other elements of financial services, is, you don't have to follow that traditional path of being a great underwriter, but then saying, okay, now I'm a manager, and you just kind of, muddling along for 20 or 30 years. And that's fine for certain people. It really, I get it, to be brutally honest, but for others, right, you can go, pull the best, you can work with your firms, right? And pull some of the best technology together and really then focus on what you like to do best, right? In the industry. And that's what's actually so exciting right now.
Joe.
Yeah, I agree with that. Sorry, Dylan, go ahead.
No, I was just going to say, I think the majority of people should be taking the corporate path. I
probably
so as much as we romanticize it and we love it, I also want to make sure we discourage the people who need to be discouraged, because
of course,
because you're going to go out there, you're going to lose a lot of money, you're going to lose a lot of time in your career, you're going to learn a lot, right? But there are a whole lot of people who are not ready to take that step.
100%. And Dylan, I've had a lot of tough conversations with really nice, great people that weren't cut out for this. And I would make that you raise a it's really crystal clear. No matter what, you're going to be working double what you're working in more of the comfort, if not triple, right? Today I still work 100-hour weeks, plus, partly because I love it, right? And, probably obsessed with it, but also at the same time, to your point, right? This isn't for the faint of heart, right? And there isn't departments and divisions that are going to source your desk, or, you got to go do everything, right? And you got to MacGyver a lot of shit every day, right? And, that's the nature of it, right? And it's not pretty. It's there are many days where I feel defeated, or folks feel defeated, but it's that Rocky line, it's not it's how you get up and respond to that the next day, right? And get recharged. And for the vast majority, you're right, people don't like that discomfort.
And for anyone doubting what Joe just said about working insane hours, I talk to Joe regularly, and I can tell you I've talked to him in 3 different countries in a single week. I have talked to Joe I've gotten text messages and emails at any hour you can imagine in the world. It is Joe works all the time. And I think it unfortunately it happens after you've made the step out of corporate and into this world that we're in. When you're a builder of a company, if you made the right jump into that world after you've done it, because you realize you can never go back. You don't want to go back. To go work a corporate job is really tough for people who have made that step, and it's if it's the right step for them.
I don't think any of us on this phone would do that again, right? It's kind of you got to be tough. You're built differently.
But I do think that there are corporate jobs that allow for a lot more of that than others, right? Because when I went from Travelers, massive, I think when I left there was 36,000 employees. Great company. I learned so much from them. They have great corporate training. You got all your licenses through them. A lot gained from it. I went to James River, and I think at that time it was like 120, 125 people. When I went there, it 10x'd in size while I was there, essentially. And that journey was so much fun because you're getting to build something. They gave you lots of opportunities to do that type of work, and to say, hey, I've got an idea, and you actually can run with it. So there are companies that where you can be in the right place and still have a bit of both worlds. But so that's probably a great first step for a person who thinks they may want to go into building their own business. Or be it, early stage, either if it's a co-founder or a, employee 5 at a company, is first starting to work at a company that actually genuinely has an interest in growth and innovation, and see how that feels first.
Yeah. Well, as somebody told me years ago, it's like you're built for like PE or VC, and the pace and the speed and the velocity is something different, right? And look, you to be real talk, right? You sacrifice a lot, health wise, personally, relationships, family, and so forth. But it is generally rewarding if you can execute, right? And I do think there's a meritocracy based model that really manifests itself in entrepreneurship and when you work for PE or VC backed entities. So I know we're coming up at time, but really appreciate the opportunity to be on your podcast today, guys. I think this was a fun conversation. Hopefully you enjoyed it as well, and hopefully there's some insights. I feel like I did a lot of talking.
It was amazing. It was amazing.
But that's why we have you on. It's nice when our guests speak more than us, which doesn't always happen.
That was great.
Peter, real quick, let's get our question in.
Yeah, Joe, we like to end this show with a question about legacy and what you see that for yourself in your professional life.
Oh, wow. Good question. I think in terms of my professional life, if there's like one thing I'd leave the industry with, Peter, it would be this is, I think that, people say, look, I was kind, I was helpful, but I also kind of helped build things that worked, and, understood. And, I think that, I'd like to be remembered in the industry as somebody who, really helped enabled, folks to realize their ambitions and dreams in the business. And, and if we couldn't do it here at Altamont or for the companies I worked for in the past or maybe in the future, here, at least I, gave them some constructive, thoughtful feedback, and my network helped them get to the right place. So, yeah.
Well, Joe, you've already fulfilled your legacy because I know you personally helped me. So I appreciate everything you've done. And so you've already achieved your legacy. You're done. You can
appreciate it. I could go retire now. No, I think I got a few more years left to be done. So I'd love to work with you guys, all of you guys, in some future capacity as well. So thank you.
Yeah, we appreciate you.
Thanks so much, Joe.
All right.
Awesome.
Thanks,
Doug, Peter, Dylan, have a great day. Take care.
Talk to
you later.
Take care. Bye.
That was fun. Really good guy.
Yeah, it's great.
He put up with all of our bullshit, so I appreciate that.
As soon as he leaves, you break down and just dropping BS words. It's that now you have to cut all this out.
He started. I think we're fine.
That's it. That's it.
But honestly, my computer did say, "Can we it's been 5 minutes."
Stop with the claims.
Flashes up like claims.
Guys, you talked about claims so much. That felt so good.
Yeah, I thought I was like,
oh yes,
someone's gonna love this.
Oh, I'm so happy. I'm just floating over here.
Yeah.
So.
Very good.
I must admit, like it is pretty true actually. So before we, I think we even started doing Age of the MGA, I'd reached out to Joe on LinkedIn, and just as he alluded to on the show, he sent me his Calendly, and we had a 15-minute chat, and doesn't know me from Adam. So I must say that's pretty genuine, and it's not always the case with people in that type of position. So
he must have one of those brains. He just remembers everyone. I don't know how he does it. He'll remember conversations. Like if I didn't follow up on introducing him to somebody that I said I would, or that he was going to, he follows up. How do you remember that? So
yeah. You don't remember the invites I send you for our show. So
you could send me something right now and be like, I don't know. That's mostly I just like to I selectively ignore a lot of things. So that's just me being an asshole, I think, not forgetful.
That's
I might not show up to our event on Monday. Just for funsies.
I hope as long as Sven's there, that's all I care about.
I haven't invited Sven yet. I should. You know what? We need somebody to work. We need somebody to work the table, so that's good. Some German eye candy in there.
The true powerhouse of jurists should be there.
Yeah.
I've told you this story already, and he'll be embarrassed for me telling it, so that's why I'm doing it publicly. When we were speaking with an investor, like in person, and female investor, could have been anybody, but and Sven's a tall, good-looking German guy, and I'm speaking, pitching, giving my heart into it, and I just saw this woman looking at Sven like.
He's built like a Terminator. The guy is he's a stud.
He's a good-looking German dude. Like there's no around. Great hair. He works out a lot.
Listen,
that's his only vice. His only vice is working out.
Yeah, great hair, but no one touches Salvucci. He's got the best hair in the industry.
Salvucci does have the best hair in insurance, no doubt.
Shout out to Fortside Insurance, who happens to be my insurance broker, owned by John Salvucci. Great guy.
Dylan,
he does,
I don't know this guy.
He does all kinds of insurtech work. So Peter, if you've got an insurtech and you're working in the States, you should have Fortside.
You should be working with Fortside Insurance.
I have an insurtech, and it's a US company. Okay.
And now Fortside owes us $5,000. They didn't know they were being sponsoring the Joe Zuck episode. So
$5,000 per mention. Yeah.
Per mention.
Fortside.
Yeah. Getting nice. Or just a free policy. We don't worry about any rebating laws or anything like that.
Yeah, I don't know how free policies work.
Do you guys buy insurance for your companies?
Actually, okay, one more Sven story. Sven for the longest time didn't believe in insurance. It's like, you work in insurance, you have to buy insurance. He's like, should I get this insurance policy for travel? I was like, yes, just every insurance policy put in front of you, buy. Doesn't matter. You have a lot of making up to do.
Nice. So that was a great conversation. I enjoyed it. It went really quickly as well. It just time flew. So.
Yeah, some of our other guys,
hopefully for the audience, maybe not so much.
Right. Just dragged on.
So much claims action. Everyone dropped off after minute 7 of claims.
Peter, which guess were you thinking of that the conversation really dragged on that you were comparing to Joe?
It's not really the guess. It's mostly when we speak that I feel time stands still. But yeah,
I get it.
No, actually, do you know what? I was looking at the stats the other day about our podcast, and I must say,
we love bringing up that.
I love bringing out the stats, and I really appreciate all these people that are listening and do reach out, because there's actually a nice community of people now, and I genuinely feel this episode will help guide a lot of people about what they should be doing and their visions. So
there was
I'd give us a tiny bit of credit amongst all the negative.
Very little. There was a lot of early career advice given that I did not expect. Kind of came out of nowhere. That was really good.
Yes.
So,
That was Joe was definitely directing that towards you, Doug, and thinking you should go into a new career.
yeah, he's like,
This young guy.
We actually do not want you. We don't want you in this space.
You should go back to corporate life.
Yeah.
He's like, yeah. When we were talking about people who fail, he was looking straight at you at the screen.
He's like, here's the Chubb job board.
Talk to Evan. I'll talk to Evan for you. I'm well connected. There you go.
It's like the little.
We should get Evan on the show.
Yeah, I think we ruined that today.
No, he seems like a good-natured person. I think he would come on and not talk to us, but at least like come on just to like ghost us. Schedule it.
I went to the same year that I met you in person for the first time. When I first met you, I brought you out to that event with Wilson Elser.
You did. Yeah.
It was either that one or the other one that I was in. Both were in New York. Yes, I go to New York, Doug. I know you always tease me on that. But one of them, Evan was speaking at. Was it the one that you were at, or is it the other one? Because he was there. Okay,
I don't remember.
All right.
Dylan, that was like 500 years ago.
That was when you were just getting into your insurance career.
Well, I'd worked at Mercer. Don't forget.
Yeah,
the Marsh McLennan Company.
Work. Okay.
Sure. I was like the tip of the spear of their legal department.
Yeah. The lackey. They're like, yes, you're in the mailroom, so you're receiving all the lawsuits.
My old boss, who I love very much, but the business people loved me at Mercer, because I got the deal. It's like, yeah, we're lawyers, but like they're trying to write this business. Let's just let it go. So like, I don't know, like limitations, liabilities. I was like, listen, what do we got to do to get this thing done? And so my boss used to joke after I left. When 6 years had happened, statute of limitations for how we wrote our contracts, the state that we did it in. She's like, we finally like have all of these contracts like off of yellow, like Amber Alert, that you would because we know we're not getting sued on these now. It's like, oh, thanks. Like the legacy remains. So
nice. Well, Doug, have you gotten any more cease and desist letters this week?
Oh, Dylan, you know how to like. I did. I'm having a lovely.
Any from Chubb? Because I feel like Evan's writing one up right now.
He probably got his team working overtime right now on that. No, listen, like how to deal with these. There's a lot of people that just, they have nothing else to do, I guess. But good for them. Like, we'll work.
What's
you didn't take the bait. I'm proud of you, Doug.
Yeah, let's talk offline. But I'm interested in the detail of some of this, and
people
can DM Doug if they want the details.
we can talk offline, and I will give only facts, to be very clear, extreme facts. Yes. I think the best way to give facts is just to like give over the information without commentary.
Unsigned contracts and such. Yeah, I like it.
Very, 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 very insightful statement to close the show.
Yeah, we're like driving right off the edge. We're gonna close on a really weird thing. I had the strangest dream last night that I looked over the edge of like a building, and there was like a slant down. And I was like, I think I can make it down that. And I thought the bottom of it was like on the first floor, but it was like 30 floors up. And so I was like stuck on this ledge. And my thought was like, I have an episode of the AG&D tomorrow. Like I need to get down, but I'm going to be embarrassed because like the police, like there's going to be like camera crews and everybody watching this. It was a very strange dream.
So this is three days before we host a rooftop party.
Oh, shit. Yeah.
Don't let him drink too much, Peter.
No, I can't drink too much. I'm not allowed near any of the windows.
Sounds good.
All right, guys. I think we're on a little hiatus for a bit here, unfortunately. I'm very, very sad about it, but
that's all right. We got several episodes piled up, so
no, it's not about it's about seeing you guys. I don't care about the episode.
You're going to see Peter in 3 days.
We'll be together every day for next week,
but not to do a podcast.
Okay, all right. You're going to do a podcast about me. I know it. I know it's about to happen.
Maybe.
What should the audience do, Dylan?
Oh, click.
If they haven't already.
like and repeat, like and
subscribe, like, follow, depending on what platform you're on, whatever.
Give any thought that comes to your mind on our show, good or bad.
Yep.
Bad is
we
better.
post, add your comments.
We love
the recipes. Thanks, Mom.
Thank you, Mom.
All right.
Go eat some chocolate chip cookies. Bye-bye, guys.